Taking a look at the interest rate market today, I want to focus on the 10-year note. The 10-year note under some selling pressure today. We saw selling pressure across the board, but when you look at the curve, really it was the 10s and the 30s to some degree that realized the majority of the selling pressure. We had some news come out today that certainly impacted the market, but I can tell you when you look at the 10-year note right now, settling right around the 131 level, that's that September contract. We are seeing the rolling of positions continuing as well. So September contract right around 131. We did see a high of 131.17 and a low of 130.26. So again, a little bit of a bid into the market late in the day, but nonetheless still lower on the day. And really today there was a couple of news items that really impacted the market, I believe. Number one, we saw the U.S. administration indicate that they're looking into the ultra-long bond initiative, and that would be initiating possibly 50-year or 100-year bonds. And when that announcement came out, we did see the market react to that, particularly the longer end of the curve came under some selling pressure. So that was one of the dynamics today driving the market price action. Second of all, we also saw the equity markets rally on news from the trade situation, and that is another reason why I think we saw the bond market selling off today, but we saw the equity markets definitely rallying throughout the day, pushing back up above the 2,900 level for the S&P. So again, that shifting and rotation took place today, and that was another reason why we saw some selling pressure. Now, looking at the yields in the space, I think it's key to point out now, we saw the 30-year get back above 2% briefly. Now, it did settle just below 2%, but we did see the 2-year get back above 2% when those announcements came out this morning. 10-year right around the 1.50 level. We saw a high of 1.52 as the yield today. So again, a little bit higher yield than what the market has realized the last couple of days. And also the much watched 2-year, 10-year yield spread converged today down to 1.5 basis points. Now I can tell you in the after hours market, we're seeing a little bit of a gap widening there, that inversion widening somewhat, so it's back out to about 3 basis points. But we are seeing right now, again, the yields on that 2-year versus 10-year basically in check with each other as this market continues to move through some of the moving parts that it's dealing with. But today, a little bit of selling pressure. We saw the equity markets bounce back on the relief from the tariff situation, as well as an impact from the U.S. administration indicating that they might initiate ultra-long bond durations to take advantage of these low current pricing structure.